Let's take a look at some Chapter 11 problems. In number 45, Hart, an individual, bought an asset for $500,000 and depreciated by $100,000. So remaining basis, or the adjusted basis, is $400,000. And he's in the 32% marginal tax rate bracket. So that means if we look at Appendix D in the ordinary tax rate schedule, he is in that 32% bracket. So what we're going to find is that if he has any gain on the sale of the asset in these different scenarios, to the extent that depreciation was taken previously as an ordinary deduction, the gain will also have to be taxed as ordinary income using his marginal rate. Any gain beyond the depreciation previously taken can be taxed at preferred rates for him as an individual. And those preferred rates are also in Appendix D on the second page in that table. So in the first situation, he sells the asset at a gain of $50,000, we see in line 5. And because that has not exceeded the line 3 accumulated depreciation taken, all of that $50,000 gain is recaptured. And what that means is it's characterized as ordinary income. So when we see the calculation of the tax here at the bottom, the $50,000 is multiplied by his ordinary marginal rate of 32% to compute the $16,000 of tax. Now in situation B, he's selling this for $550,000, so his gain is larger. Line 5 gain is $150,000, and that is greater than line 3. He's only going to be taxed on ordinary income to the extent of line 3. So of the $150,000 gain, $100,000 of that is ordinary income, and the other $50,000 is the Section 1231 gain. So you see in the table calculating the tax, the actual income tax, now $100,000 ordinary income is taxed at 32% ordinary marginal rate to get $32,000 in tax. The remaining portion of the gain is taxed at 15%, which is the preferential rate for taxpayers in that 32% marginal bracket. And again, that's found at 15%. It's either going to be 0, 15, or 20. 0 is when the marginal rate's at the low end of the tax rate schedule, and 20 is at the higher end. So 15 is those the rate for those brackets in between. Now in C, we have the asset sold at a loss. When a loss occurs, it is all Section 1231 loss. And what happens then is it benefits the taxpayer because it's deemed to be an ordinary loss. So taxpayers like ordinary losses because it offsets their ordinary income. So by being able to deduct a $50,000 loss, even though the bad news is there was a loss, the good news is that that loss saves him 32% to offset the income from other sources. So it saves him $16,000. In letter D, the amount realized is $450,000, and just like it was in A, but this now becomes real property instead of non-real property. So that's called in line 6 unrecaptured Section 1250 gain. And what happens with that gain is none of it is considered ordinary income. It's all 1231 gain. However, it could be taxed as high as 25% instead of 0, 15, or 20, depending on the marginal tax rate for ordinary income tax rate purposes. And that's what happened in this case. The taxpayer was in a 32% tax bracket, and so he is going to be taxed at 25% on this instead of 0, 15, or 20. Now, if he was in the lower marginal tax bracket, he would not reach the 25% maximum rate on this Section 1231 gain. In letter E, Hart is now a corporation rather than an individual. So in this situation, the gain from line 5 is compared with line 3, the accumulated depreciation, and we take the lesser of the two and multiply it by 20%. 20% of the lesser of 5 or 3 is taxed at ordinary rates, and then the remaining portion is taxed at ordinary rates as well, because in this case, this is a corporation, and with the new tax law, there's just a flat rate. There's just a flat 21% tax rate. So all of the income ends up being taxed at 21% for a total of $10,500. The last question asks, in which situation or in which form of organization will the taxpayer pay the least amount of tax? And it shows here that the corporate form ends up being the lower tax, and that's because it's a flat rate of 21%. And if it was real estate that was not a corporation, as we saw in letter E, then some of that gain is 25%. So it saves him the most money to incorporate. And that also is an example of how this Tax Cut and Jobs Act has really made some sweeping changes, and many companies, many organizations will be switching to the corporate form, or if they're just starting off new, they may choose that corporate form right from the start. We'll end this video here and then pick up with video 2 of this sample problem collection.